What is good, guys? It's Rey-Jay back with another video, and in this one I want to break down what's going on with the overall market. I'm going to break down some very important levels to be watching for and why we have even more data coming out that's just as significant as CPI coming out for tomorrow. Before I break anything down, all this information, before I talk about what data is coming out tomorrow, what happened with CPI, and some very important things to look at on the charts, let me just mention a couple of things. Firstly, I am not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out the Moomoo link, which is down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you are guaranteed up to 5 free stocks. If you deposit $1,000 into the account, you are guaranteed up to 15 free stocks, and this offer ends very, very soon. So check it out before they run out. Anyways, now let's break down what's going on with the markets. We had an absolutely insane day on SPY today. We got this nice little pump in the morning. We saw this thing hit 478. Then we got this big rejection coming down to the 472s, a big 6-point drop, followed by a nice bounce, a very monstrous bounce up to almost 477. Then we dropped a little bit more at the very last hour to close a little bit in the red. The market's been dropping in the after hours since, so the market's very indecisive, going back and forth and back and forth. The question is, what's going to happen tomorrow? What happened with CPI to cause this, and what should we be watching for as time goes on? CPI came out in a very, very interesting fashion. Core CPI came down just a little bit. It was aligned with expectations, but for all items CPI, this was a little bit hotter than expected. Right? It was 0.1% hotter than what the expectation was, and we got a 3.4% reading overall. So this is actually a little bit hot, and we saw a slight increase once you look at the overall data. But overall, the data actually showed most things were actually decreasing in terms of their inflation rate. Uh, I'm not saying prices are going down. There's a big difference, right? Just because inflation goes down doesn't mean prices are going down. All it means is that the rate at which prices are going up is decreasing. That's all that CPI slowing down means, right? We're not in deflation. We're just looking at signs of disinflation, if anything like that. But what carried this? The answer is very simple. It's basically energy and also housing. Those are the two biggest things that could cause this to go up looking at the data. You'll also notice that when they had to adjust for the data, that's the reason why energy ended up playing as big of a role as it did. But hopefully we still see housing kind of decrease as time goes on. I'm really hoping that ends up happening over time. Still could happen because of the high interest rates, as demand has still slowed historically. But if anything, if we end up seeing anything change like that, or at least the housing inflation ends up slowing down nonetheless, I mean, the data is still not that horrible. A 3.4% inflation rate was not that horrible. So overall, this doesn't really change my view. We're still on a big downtrend. But the thing about this is, although it's still not looking that horrible, what I will tell you is that this does affect the Fed's policies. And let me talk about that in just a second. So I just want to make it clear that I don't want to trivialize how things are basically looking for the future of America. Unemployment is going to go up. I'm well aware of that. I know that there's pain coming for everyday Americans with these high interest rates. I know a recession is coming, and it's nothing that we should just be taking lightly. It's best to be prepared for the worst, and the Fed is basically monitoring everything very closely. Also, I just want to note that I don't fully trust all of this data. I know I'm talking about it as if I do, but I don't fully trust it because the data is manipulated. The data could be manipulated just to cause certain moves, and all these numbers are basically manipulated based off different weights and different narratives and intentions and agendas that other individuals or institutions have. But the reason why I talk so much about this data and look at the numbers so closely is because this affects the markets. The market accepts this data, and we're forced to basically take it seriously. All right, so I want to make that as clear as possible. But anyways, based off the data we got, this is going to affect the Fed's policies. I mentioned earlier that the market is basically expecting, or it was expecting, the Fed to basically cut in March. Now this is actually dropping a bit, the expectation of a cut, because the Fed cannot walk around and start telling everyone, we're going to cut in March. The cut is coming. They can't say that now because now things get very complicated with a slight increase in CPI. The Fed is forced to say something such as, there might be an increase in CPI, but we're going to continue to monitor the situation. We're going to be patient. Uncertainty, ambiguity is going to be in the Fed's mouth. This is what's making things complicated for the markets. This is why the market sold off initially. Now, although the market sold off, it's not crashing. There's a big difference. If this thing was a really, really super bearish trend, we would have just collapsed and we would have closed very low and just continued to downtrend. Instead, the market made a recovery because the buyers and the algos stepped back in, which means it is still possible for the market to pump. It's also possible for the market to dump. the market is still very indecisive, and that's going to be very important for tomorrow. Now, there's even more data coming out for tomorrow. Two main things, as I mentioned earlier, we have PPI coming out. That's going to be very important. PPI is a leading indicator for CPI. It's also very important for the Fed's policies. Here are the two things to know about PPI. We're expecting core PPI to be between 1.9 and 2%, so very close to the previous reports. Remember, that's very similar to CPI. We're expecting like something close, if not a little bit low. But for PPI year over year, we're expecting a slight increase. We're expecting to be between 1 and 1.3%. The last time it came out, it was 0.9%. So if this goes up a little bit, this could be a little bit negative for CPI in January. So we want to be very careful with this. We will see what happens with PPI year over year. This data is coming out an hour before the market opens at 8:30 a.m. Eastern Standard Time. Make sure you watch for volatility at that time. Then we have Kashkari from the Fed giving a speech. And after that, we have quarterly grain stocks, some data coming out for that. But everything else is just super minor, nothing too crazy. So watch all of this data very carefully. We'll see what this causes. I can't really predict PPI. I would be lying if I said I could. I really can't predict it, so we have to just wait and see. The best thing we could do is just to be patient. To add on to this, we have something else that's unpredictable for me, very capricious. That's going to be the major earnings coming out tomorrow. So we have JP Morgan Chase, Delta, Bank of America, Wells Fargo, BlackRock. BlackRock is a massive one, and Citigroup all coming out. This is important because whatever happens with the banks is going to affect other companies out there. The banks are helping to finance these different companies out there, millions of companies all over the world, especially in the US. This is super important. So whatever happens to the banks is going to affect them, and the interest rates will affect them as well. The last few earnings have been kind of mixed, if not kind of decent. So we'll see if this is a decent earnings report or not. I'll be waiting to see how this goes. If I was a fortune teller, I would tell you what's going to happen, but I don't know what's going to happen. So I'm going to be very reactive tomorrow. Just wait and see what I see and then make trades based off that. I'm also going to be very patient. So I just want to warn you guys about that. Make sure you're very patient as well. Know one more thing that's very important for tomorrow. For SPY, for tomorrow, which is January 12th, we actually have a 1.56 puts to call ratio with 472 being max pain. This might increase as time goes on. So with more puts expiring, the market makers may try to hold the market up. But once again, guys, it's impossible for me to give you guys a very accurate projection without seeing the data. So with that being said, guys, I'm sorry I can't give you guys a super accurate prediction, but I can tell you that it all depends on the data. And we'll have to be watching the data very carefully, but I can go over different contingencies. So basically, if CPI is not CPI, PPI is decent, and let's just say the earnings that come out from the major banks out there are decent as well, SPY could push up to 478. If it breaks this, 480 is a real possibility. We could be approaching all-time highs. If we get bad data, if the bank earnings are not the best and simultaneously PPI is not that great either, this could also sink the markets. I also believe that the bank earnings are going to be a bit more significant than PPI, so watch that very carefully. Prioritize the bank earnings over those. If we get bad earnings, we're going to be looking for a move back down to 474. If we sink lower, then 472 is on the cards, just like the low we made yesterday. So the best thing I could tell you is because the market's indecisive, be patient and wait. Be very patient. This is one of those times where we're not going to be trying to predict it. Just wait and see. Let's see what the data looks like, and that's going to give us our best view. But right now, we're very indecisive. We're in the middle, and we'll be watching to see which way we go. On the QQQ, okay, if we're bullish, we're going to try to break above this rising wedge and try to get back towards 412 plus. If we're bearish, you want to see this thing lose 406 and 404. We will see what the data gives us for PPI and the bank earnings to determine which way we're going to go. As of right now, we are on an uptrend. We're still making higher highs and higher lows technically, but this could change. All of this could change depending on what happens tomorrow. So I'm going to be very patient when looking at it. For Tesla, Tesla's in a very critical level, not looking that great. We had some bad news for Tesla, which could affect other stocks. Basically, Tesla Berlin is going to suspend most production for 2 weeks over the Red Sea because of the supply gap, because of some tensions and such. So that's some negative news for Tesla. This has been selling off quite a bit. There's also some bad news involving Hertz and such. I just want to mention that Tesla's looking very weak. It's also selling off during the after hours because of this news. But we're going to be watching a critical support. In my opinion, let's see if Tesla could hold support or not, because when we look at the weekly time frame, we switch over to our moving averages. It's very simple how this is going to look. We're going to be looking at basically the weekly 50 EMA. Let me just pull this up in 1 second. The weekly 50 EMA is at this 224.5 area. If we lose that, 217 is next. We're going to be watching to see if we can close above 224 tomorrow. The earnings that come out are going to affect Tesla, so it could bounce in the morning, but what matters more is how we close. If we get a very weak close, Tesla's going to collapse. If we get a decent close, there's a good chance that Tesla could still try to hold up and bounce off this moving average. So we'll be watching that very carefully on Tesla. Let me just call out some levels now before I end up switching over. As far as Tesla goes, let's just say we get some decent earnings. Tesla could retest this green trend line at 228. If we break this, 230 is on the cards. If we lose 225 to 224, we could be seeing this thing come all the way down to 222.5. That's going to be like a very important level technically. And then below that, I mean, I wouldn't be surprised if Tesla comes all the way down towards this 220 area if we lose 222.5. So if anything, we have some tight resistance coming up, very close to our 50 EMA. That's why I have some very tight levels here. But if we lose 222.5, we turn very, very bearish, and I think a bigger drop is coming. Now, how does Tesla look? It looks very bearish right now. If I'm going to be honest with you, it looks bearish. It's looking very weak relative to the market. So there's a good chance of some selling that's coming. But just to be safe, watch the data, and we'll see how it goes. For Nvda, if we're bullish, we're going to be looking for a break above 550 plus. We're going to be looking to see if we could get that break. If we're bearish, we want to see it lose 544 down here where this support happens to be to 545. And then if we lose that, 542 is coming and a much lower supports down here. I can't really predict exactly what's going to happen. It depends on the data, depends on the earnings. So I'm going to be very patient. I'll be waiting to see how it looks. It is starting to kind of shuffle up here, showing signs of some tight resistance that's slowing it down a bit. So be careful. There could be a retracement coming, but just to be safe, we'll see what the data gives us. For Aapl, watch 188 as key resistance. That's a critical resistance. If we're bullish, we're going to be testing that. We also have resistance at 186.5 and 188. If we're bearish, you want to see it lose 185, then test 184.25, 183.5, and if that fails us, 182 is coming. Now, we'll be watching to see how Aapl responds to the big bank earnings. That's going to be very important for Aapl as well. From a technical standpoint, one could argue we have like a nice cup and handle like formation. So I'm not going to like kind of pick any sides or anything like that. I'm just going to be patient and wait. And with that being said, that's pretty much it for now. Now, let me just go very, very quickly through just a couple of these. I'm going to make this kind of quick. For Rivian, we look kind of bearish right now. SoFi is looking kind of bearish. SoFi is kind of selling off a little bit. We're going to be watching 7.86 of $8 ends up failing us. If we're bullish, we want to see this thing try to break above 8.45. The bulls want 8.45 to break. The bears want to see us lose $8, then the 200 EMA at 7.86. So we'll be watching this. We're in this range right now. We're still stuck between the moving averages. So with that being said, we'll wait for what the data gives us. IWM is looking kind of weak, but it did make an attempt to bounce. If we're really bearish, we want to see it test 188. If we're bullish, we want to see it bounce and try to break above 197. We're dead in the center. So the best thing to do is just be patient and wait and see how it goes. For a couple of other tickers, Microsoft is still holding up nicely, but this could be a rejection forming, so there's a good chance it's going to reject back down to about 380. But technicals are just one factor. We'll see what other factors affect it. Do we launch up to 390 or do we end up getting a rejection back down to 380? This is going to depend on the data tomorrow. It is looking a little more bearish on the daily time frame, but just to be safe, we'll wait and see. For AMD, it's looking a little bearish. Could be looking for a move back down to the wick at 144. But just to be safe, we have to see if we get this rejection or not when the data comes out. If we try to bounce, watch for 151. If we break that, 155 could be coming. So bullish. If we're bullish, 155 is our target. If we're bearish, we want to see it come down to 144. I'm in the middle, but I do want to note that technicals look a bit more bearish. So just be a little bit careful with it. On top of this, just for a few other things, the VIX is still kind of flat right now. It did drop a little bit more, but it's still holding 12.3. So we'll see if it holds support or not. It's nearing a bearish crossover on the daily, so it looks kind of bearish on the VIX, which suggests that the market may bounce tomorrow. But just to be safe, let's wait and see if this thing does get the bearish crossover, if we lose 12.3 or not. On the dollar index, very flat right now, very indecisive. Let's see if it loses the 50 EMA or if it, not the 50. If it breaks above the 50 EMA, we're going to turn a bit more bearish. If it loses the 20 EMA and loses 102, this is going to be a little bit bullish for the stock market. So if this loses 102, we're bullish for SPY and etc. If it breaks above 102.8, the 50 EMA, this would be a bearish signal for the markets. Coinbase had a horrendous day, big drop, despite what the news that came out from the SEC. This is forming kind of like a head and shoulders like structure, so be a little bit careful. We're approaching the support right here. And I warned you guys that if this thing turned bearish, watch the daily 50 EMA, watch 135 now. Let's see if Coinbase could hold this. It's going to test 135 most likely. If it bounces off 135, it could rebound towards 153. If it fails to hold 135, it's going to be sinking back down towards the lower levels, such as the 120s. So be very careful on it. It looks kind of weak right now, very bearish looking daily candle. So be careful. Google is kind of flat right now. If we're bullish tomorrow, look for a push towards the high we made at 147. If we're bearish, we're going to be rejecting and coming back down towards our 20 EMA. I'm in the middle on Google, guys. It all depends on the data. So we'll just have to see what the reaction is. Amazon got a nice day, but we're starting to form this doji. I would say that we have a potential bullish crossover on the PPO. If we continue to break out, watch for 160. If we're bearish, we want to see it come down to 152. I'm in the middle, but it is looking a little bit more, it's kind of indecisive, but simultaneously a bit more in favor of bulls. So it favors the bulls a bit more from a technical standpoint. We'll just have to wait and see. For Meta, we're kind of flat right now. If we're bullish, we want to see this thing break above 374. If it breaks above that, we're going to be looking for a push towards 380. If we're bearish, we want to see this thing basically lose 363. If we lose that, then 360 is coming. I'm in the middle, guys. I'm completely in the middle for Meta. It is looking a little more bullish technically, but I don't really trust technicals fully right now. We'll just have to wait and see what the data gives us. So, all right, guys, I'm a very honest person. I'm going to be telling the truth. I don't know what's going to happen with the data tomorrow. I am not some kind of fortune teller. So I'll have to wait and see what the data looks like before giving you guys any kind of like accurate analysis about what could end up playing out. But I went over the bullish and bearish cases. I went over what charts are suggesting for now in a very unbiased manner. So we'll just have to wait and see. With that being said, thank you all for listening. Have a great day, and I'll see you guys tomorrow morning to report what's going on with all this data and the earnings. Thank you for listening. Have a great day, guys, and peace out.